there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own opinion to you, the viewer. We expect you to take this opinion, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders Weekly for the week of September 8th, 2024. And joining me this week is Viper XL 007, and it has been a while since we have taken a look at the crypto space. So today's episode is going to be very crypto focused and discussing a lot of Viper's most favorite topic. And really, crypto, from what I can tell, is price action on hyperspeed. And Viper is always exploring new nooks and crannies, and so we'll see what crevices of crypto he might be dabbling in this week, as well as any of his general thoughts on the overall crypto market. But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can click in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. Also, you'll find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts, so look us up, subscribe, and if you can't find it there, let us know and we will get it there. But let's hop to this week's content. Viper, crypto land. It's been in the news a little bit about everybody saying we're going to zero. Actually, they haven't said we're going to zero, but they talk about how they've lost critical levels in Bitcoin, and they're saying that it's going to go lower. And, you know, we've seen this movie before. I guess I'm kind of waiting, for our $5 AVAX so I can load back up, because right now we don't seem to be hitting $5 and we don't seem to be going back to $150. So I'm kind of bored in AVAX land. But what's happening in the crypto space these days?
Yeah. So, I mean, it's tough. I mean, so normal disclaimer, as always, hard hats are going on, going into the hard hat zone. This is, I said it last week and I'm going to say it again, as far as these being the most manipulated waters in the world. Very much the case. But yeah, like you said, it's, like, I mean, well, I'll get into more of it here in a minute, but yeah, it's the word boring comes to mind.
Hey, man, I'm bored. Although I do think this could be more exciting if we really do get actual hard hats. So maybe I need to look into that.
That is very true. Yeah, I mean, so the word boring comes to mind, but like, I don't know. I mean, that some of that is, I don't know, is that a desensitization thing or whatnot? But yeah, you're right. I mean, so I think recently there might have been an inverse Kramer moment where I think Jim Cramer went on being super bearish on crypto again. So that was a thing that, got everybody saying we're going back. But for a while now, so there was, if people probably last heard of crypto in the news, was probably back in the springtime. There was some massive upticks. We started charging forward. Bitcoin hit a new all-time high, but it never felt like we were back. It's weird. So fast forward now, I mean, so that was like March, April timeframe, and fast forward now, we're sitting into, well into getting into the September. And it's just been like, we were supposed to be at like, I don't know, $1 million Bitcoin by now. But we're not. We're just floating around, fluttering, wig-sawing back and forth. So that kind of brings us to what I wanted to talk about here. And what that is what I'm about to go through is just kind of throwing a whole bunch of stuff against the wall. So the intent is certainly not to have anybody think, I got to do that. I got to follow that. One thing I noticed is, as I've, over the last 2-3 years, however long it's been that we've been doing the show, as I've explored into different topics and things like that, especially when it comes to price action and TA, technical analysis, I've watched so many videos from really dumb, stupid, terrible videos to really good, sharp, and there has never been one like this is the thing. There's one that's been close. We talk about it on the Discord. It's actually pinned in the Discord, so plug to the Discord. You should come check it out. But nonetheless, there's not like it's always just this little like pick up a little bit here, pick up a little bit here. So that's my main intent is to just I'm throwing a whole bunch of stuff against the wall, and maybe some of it resonates with you. And my overarching goal with this is just to kind of go through kind of what I've been doing, why I find it interesting, and then hopefully tying it all together that even if you're in the camp of you don't give two rats behinds on anything crypto, I'm going to tie it all together because I think it can, come together to make a solid point for anybody interested in any level of investing or trading anywhere. So, I guess with that said, we'll hit the main course here and see what the heck Bitcoin's been doing because Bitcoin, love it or hate it, it. And so this is kind of just a chart, an old chart that I had. I had these ranges scoped out, but this is just kind of showing you over time what we did. This was the 2020, 2021 bull run here in the middle. We obviously came way down, $15,000, $14,000 Bitcoin, and we've roared back. And so this was that roaring back that I referred to. We pegged in some new all-time highs here, 73,000. And then what in the world is this? Like it's just bleh. And so in that time frame, we obviously had the Bitcoin ETFs, the spot ETFs get approved. We had a rush job on getting the ETH ETFs, Ethereum ETFs approved. So there's just a lot of speculation on what exactly is happening right now. And I mean, a lot of it revolves around just money flow. So me personally, we have all of these new equities products that are backed 1-to-1 to the underlying asset. And so this honestly is a little bit more of what I've come to readjust my expectations to. As far as the crypto market, that the more obviously the super maximalist theory was, we get these ETFs and then it's just straight to the moon. Rampant speculation of $1 million Bitcoin. I think, and I mean, this sounds silly, but like it's coming from legitimate hedge fund managers. I forget, I'm not going to remember exactly which one, but I mean, there's a peg on a board from an official, I don't think it was BlackRock, but somebody like that I think it's by like 2035 or somewhere on that time frame. The high estimate for Bitcoin is somewhere on the order of $25 million per Bitcoin.
I'm putting that in my calendar. I'm putting a calendar reminder. Go back and watch episode 182 in another 10 years.
And then, remember, and then let's talk about all the Bitcoin we lost, and then what that would look like at $25 million per coin. But it's also, to be very fair to any of the skeptics anywhere, the range, I mean, it was laughable. So they were like, in 2035, we predict the price of Bitcoin will be somewhere between $180,000 and $25 million. I mean, I don't even know why they bothered. Just say $1 and 25 million. Like why go 180,000? But nonetheless, Chop City. And so this has kind of been my redefined expectation of the more, I don't know, and maybe it's just me being bored, but I feel like the more these equities products like these ETFs get exposure to the capital markets, I feel like the more they're just going to behave like equities products, the more subject they are to the way the market moves. So maybe that's the thing, maybe it's not. But I kind of wanted to go through a few things about how I'm swimming in these waters, because a couple of things up front. I've obviously been in this for a while, and I started very intentionally small, very intentionally risk off. I still remember like my first $50 I ever sent on chain. And it was super stressful of like, where is this money going? And it could disappear at any second. All things that are still true. But, I mean, I've gotten more comfortable and explored and whatnot. So the backstory that I think is important for context is as a tech nerd, as we've talked about before in the early episodes, going through all the technological details of the blockchain and whatnot, I certainly showed up as that tech enthusiast, just very interested in the profound disruption the technology has purely from a technology standpoint. And it's very important to differentiate that from the financial impact, because the financial impact, there's a lot of truth to any of the skeptics out there saying, that hate the space from a financial speculation perspective of there's nothing behind it and all this stuff. It's not wrong. And so that was kind of how I approached and how I arrived at this space, was just bewilderment of this is this incredible world from a technological perspective. And I just want to explore, and I just want to learn and learn and learn and learn. And there's just never ending. I mean, both Sprocket and I are engineers by trade, very technical people. And still, 3 years later, there's still so much about this I just can't understand. Or, every time I think I've made one massive leap in understanding, boom, there's a whole nother branch that I don't understand. And that speaks to cryptography in general, I think. There's just a lot to it. But the other part of me showed up, and you can't show up and not look at the speculative nature of it. So where I started was obviously just dumb money all around. Like, I'm going to just buy some of this. We weren't even going into the bear yet. We were still at the peak of the bull. I was perfect exit liquidity for a ton of people. Actually like 50 people. It was $50. But still, I showed up with that, almost, I don't know, perverse feeling of like, I just want to like buy something and go to the moon. And, that sort of just overly optimistic, not even really grounded in reality, but in the wild west of unknown, still, couldn't stay away from thinking like maybe this could happen. So fast forward, and while there are still tons of those people in this space, I feel like I have spent my time wisely in this school of hard knocks, as they say, to kind of shake out of that mindset. Sure, I still have a bag of different things that is just kind of tucked away of like, if anything explodes in a good way, maybe that'll be something. But I've also used the time to realize that, this is such a volatile space. One of the things that I love about it is how the price action and the technical analysis just is so crisp and clean. And some of that's because it's super volatile. Some of it's because algorithms and bots are all over the place. But it's made it quite the little playground for learning these things. And that's been my main focus. Certainly within the last year and a half, I kind of really, truly forgot about that moon bag and was like, no, I need to just use this opportunity to be better at skills, like, learning to fish, not just showing up and seeing a bunch of fish on the table. So that's kind of what I want to unpack, is how I've been doing that. And of all the things I'm going to throw against the wall here, it's, there's an overarching theme of whether you're getting into this space, whether you're getting into equities, learn what you're doing, learn about the market and how it operates, because that's a huge part of what I'm going to get into. To the point where I would summarize it as the minnow doesn't need, if I'm going to get my theological, the minnow doesn't need to become a whale. It just needs to know what the whale is doing. If you're swimming in a pack with a bunch of other minnows, you might be in danger of getting gobbled up by a whale. This is kind of just broad, undiscovered haikus, Japanese, whatever. But I kind of summarize it like that, of you need to know what moves the waters and how to look for it, and then react accordingly, and then just survive that way. You know, I meant to look up the name of the little fish that swim along sharks and whatever. I equate my time to that. So I don't know. I mean, if any of that resonates as far as your experience in the equities world, but that's kind of where I've come to as far as what I've been doing to jump on opportunities is not try to be the best in the world, but know what's moving the waters and then just kind of follow in those footprints.
Yeah, I suppose it's similar in equities for me. I think it goes back to how I summarized it a little bit last week, where I was talking, really just find what works for you. I guess I'm not as adventurous as you. So I tried a little bit of adventure, and when I tracked my P&L, it wasn't as fun. So I went back to the kind of the mechanics that made sense to me, and I guess I'm that guy that's kind of stuck in that, just kind of turning the crank and moving along. But I say when I explore, it's kind of what you laid out.
Yeah. Yeah. And I mean, and some of this, and I guess another reason why I want to bring focus on this is just anybody who watches the show regularly, there is certainly would not be a incorrect conclusion to say, and it's a running joke in our Discord as well, of sort of this restless ADD. Oh, look, he's doing something else now. And some of that is just that exploring nature. But it's also like I'm trying to find the fit, the thing that I can consistently do, that makes sense to me, and is the flavor that I can connect with, and kind of land down on.
Yeah, you're kind of like that, in the 80s, right? The Life cereal commercial. Give it to Mikey; he'll eat anything. And we're just like, yeah, this is why we keep Viper around. Hey, Viper, did you hear about this thing over there? Oh, yeah, let me go check it out. So you kind of explore some of that stuff. You're a canary in the coal mine. We thank you for it.
Yeah, exactly. And then if anybody wants to get in, you got a free tour guide to show you the ropes. So let's real quick just kind of go through something that has been very interesting to me as far as how to survive in choppy waters, because obviously if everything's going up into the right, or if everything's dumping, as crypto did a couple years ago, that's almost more boring, because it's just one thing. Floop. Granted, going up into the right is something that I'll deal with it. I'll find a way to survive. But the other point was, like, ever since Bitcoin hit that new all-time high, like there was a period of time where like I was just really frustrated of like nothing's happening. But then I pushed through it of like, no, things are happening. I just need to figure out how to still, take some wins, still make moves, instead of just being one of these bag holders that's just waiting for essentially free money of like, I bought this thing, now just send it up forever. So a couple of key things about the space. If we jump over here, there's a chart here that you can look at. It's just called total in TradingView, anywhere you get your charts. And total is the total crypto market cap. And so if we zoom out, you can see the phases. You can see the 2016 bull run way down here, see the 2021, and this is just the total market cap of the entire crypto space. And how it changed, so right now we're sitting at $1.98 trillion market cap. And if we go, so 1.98 trillion, another very helpful website is this coinmarketcap.com, which lets you scroll through, the top whatever number of tokens you want to look at. The page is 100 by default, but every token that exists is listed here in order of market cap. So we can see big old Bitcoin at the top at 1.145 trillion. market cap just in Bitcoin, and $295 billion just in Ethereum. And I believe that is probably where most viewers, the knowledge stops. You've heard Bitcoin, you've heard Ethereum, you have not heard anything else, unless you watch the show. Then you've heard our favorite number 12 here, Avalanche.
Yeah. So Viper, just before you kind of move on from this, I just want to frame this as just a point of reference here. So you're talking about the market cap of the entire cryptocurrency. To put that into relation to the equities world, Apple, one company, they have a market cap of $3.4 trillion. One company is bigger than the entire crypto space. Microsoft is number 2 at I think around 3 trillion, and Nvidia is right behind them at maybe 2.5 trillion. So just to put it into perspective of trillion, that's a big number, but then look about things in equities land.
Yeah, and to that point, we're recording this September 4th. It was just what? Actually, what was that? Friday? The big market dump?
Nvidia probably was much higher than.
Yeah, well, but in one day, when the market went red, when we started crashing down, the entire stock market dropped by like $1 trillion. I think it was somewhere around there.
Yeah.
And so, in one day, we almost lost the entire crypto space. So yeah, that's a good point to call out, because these are really big numbers, but in the context of the financial markets, the global financial markets, they're really, really small. So you can obviously see between Bitcoin and Ethereum, I mean, that's literally 75% of the entire crypto space. Is you have 75% of the entire space is Bitcoin and Ethereum. The other 25% is thousands of other tokens. And so over on the charts, conveniently enough, there is a chart called totality. And that is the total crypto market cap excluding Bitcoin and Ethereum. So that, 25% of everything else falls into this category, which is the totality chart. So what the heck does this mean? Why does it even matter? So what I've been doing is lately, so in reading the chart and, kind of scoping out what's been going on, obviously everything else, the everything else bucket has been chopping around very similar to what Bitcoin has. Although Bitcoin's been a little bit more stable in its chopping around. I mean, it still is kind of in this, I believe the pattern traders would call it a bullish flag pattern. But nonetheless, its bottom has been a little more consistent, though it is in a slight downtrend. But the totality chart is a much steeper, more well-defined channel, if you will. And so when we actually kind of bring that channel to life here, I started to notice some interesting trends here. And so again, big picture context, Bitcoin being 50%, over 50%, I think it's like 55, 56% of the entire crypto space. When Bitcoin moves, everything else moves as well. So if Bitcoin goes up, everything else goes up, generally speaking. And then there's a certain point in the cycle where Bitcoin kind of peaks, and then people that made a bunch of money on Bitcoin start rolling those profits down into everything else. And then there's a moment of disconnect where Bitcoin actually goes down and everything else goes up. But the point is that everything else moves together. And so for a while, like we talk about AVAX on the show, Solana is another big one in this everything else bucket. I have been working on my scalping, my day trading and whatnot on these other everything else tokens to different degrees of success and failure. But the one thing that I was really struggling with was kind of putting together that process, repeatability. And, I mean, some of it is just good being, get better at price action analysis, technical analysis, all that kind of stuff. But I mean, there's still this overarching thing of how the water moves together. So one thing that I found really interesting that I've been doing with much more consistency lately is taking advantage of this total 3 chart, which we can kind of think of as an index. Kind of think it as like the S&P, the S&P to tech stocks or something like that. And I it started out as like just an experiment of like, oh, okay, well, what is the everything else bucket doing in relation to, let's say, AVAX, the avalanche token that we've talked about. And so if we overlay the chart of AVAX, I mean, you would expect it to move pretty similarly because it's a part of this total 3 bucket. But what I started to find really interesting is even though total 3, even though the everything bucket goes from the bottom of the channel to the top of the channel, the price of AVAX actually doesn't really go up. It just kind of, the down pressure of the channel on the everything else bucket. So I'll just start calling that the market. But when I say the market, I'm just referring to that 25%, excluding Bitcoin and Ethereum. So that the sell pressure of the downward slope of the market seems to, at least in the case of AVAX, this is different if you look at Solana because there's different, proportions that these tokens make up of the bucket. It seems like, in my theory, that where AVAX sits in the grand scheme of things, that when the price goes up in the channel, it just doesn't overcome the downward pressure. But when the channel goes down, oh boy, it has no problem dropping. And so I kind of, brought that together a little bit here. Let me line up the chart and make it actually fit a little bit more. And it was interesting because if I highlighted the move from the top of the channel to the bottom of the channel, and that's the green box, in this channel, we've had 3.5 of those moves so far. You can see that once we get to the bottom of the channel and we work our way back up, the price of AVAX just stalls out and it just kind of goes sideways and gets really choppy till we get to the top of the channel again, and then we fall on down, and then AVAX drops 25%, a 20% drop. This 22% hasn't happened yet. That's just my own, just having fun on the chart, my own calling out a little potential. The next drop, if we continue to drop through the channel, we're kind of stalling out in the middle of the channel here. But that's also a fun call out because, again, in the Discord, we have a member who was in the space, then had a very unfortunate event in the space, but is ready to get back in if AVAX gets to $15. And lo and behold, conveniently and coincidentally enough, taking between 20 and 27%, if we get to the bottom of the channel, that is $14, $15 AVAX, which was a neat little thing. But the point here is utilizing this. I've actually now started to recognize that the trend of the market is down, and trying to counter trade the market is just never a good idea. It's just really hard to get longs to go profitable. And it's way easier if I, kind of put all this data together. And when we get to the top of the channel, then I start looking for short opportunities. I don't just go blindly jump into shorts, but I start to look at other charts, whether it's AVAX or Solana or whatever, and look for good entries on a short for a high time frame short, like on the 4-hour chart, nothing lower than the 1-hour chart, and enter in. And all of a sudden, it's not guaranteed, but things move smoother. And so that's actually right where we're in the middle of now, is this current move down here. I took a pretty good short to get to the middle of the channel here. And nothing says we're going to drop to the bottom of the channel as these things go. And it's defending it. It's holding it right now. We had a pretty steep wick below the midpoint, but the channel is holding. The candle came back up and closed above. And you can, there's a lot of price action theory, technical analysis, even though, I'm using a pattern here. As long as and we talked about this a long time ago on the show here. I think it was when Sprocket was doing like oil or something to that effect. He would spot these channels and then kind of make some different positions off of that. But you can see the rules still apply as far as price action. If the channel is genuinely derived, which I believe I have, then you can see some genuine price action in the channel. So let me get rid of these boxes and arrows and just keep the channel up here. And what I mean by that is, we talk about it with different price action stuff. It's just price action with your head turned sideways. We're coming off of a local high here. We drop down. The midpoint of the channel is just say it's a price level, and we come down and drop and we flirt around with it. And then when we lose it, we take a big drop down, we come back up, we test the midpoint of the channel, we fail, and then we go down and find the bottom of the channel, which is in reality just a lower low. So that sort of technical analysis, price action, it still applies here. As long as you have a good draw on the channel and you're not just constantly making the pattern shape to be whatever you want it to be. I drew this channel a while ago, probably, I think it was on the mid move up. And I haven't changed it. I just drew it. I stretched it out. It is what it is. And it's holding, which is a good sign. So, those are the trades that I'm making right now, is just trying to lean into this theory of watch which way the tide is flowing and lean into that. Row your boat in downstream if the water's going downstream. And then the invalidation criteria, because in every trade strategy you have, in every trade you take, there needs to be an invalidation criteria. And so in this particular case, the validation, the theory, the thesis of the trade is we're at the top of the channel. We take we make sure that we don't clear out of the channel and start getting closed candles out of the channel. We take a short, and then we take profits around the midpoint of the channel. Because like I said, there's no guarantee that the midpoint fails. We could find support here. And then the overarching invalidation for me in this particular thesis that I have set up on this channel is once we break out of the channel, we do a move out, we get some closed candles above the channel. I don't redraw the channel just to fit my theory. That's a genuine breakout. We get out above the channel, we get some closed candles up here. Those candles retrace, and then if they do kind of what's happening on the midpoint right here, say they do that above, and we start holding support on the top of the channel, like now all of a sudden we've broken the channel. The channel is in theory done, and it's moving on to a different pattern and different price action. And at that point, that's where I'm going to start looking to potentially go into longs more than shorts. But, not guaranteed. Everything in its time, read the chart and all that sort of stuff. So bringing it all together, the idea here is not to be like, you got to come in and do this. And the last thing I want is anybody to think they can just show up and do this. The main thing I want to show here is if it's something that's interesting to you, if you're not sure where to plug in or whatnot. I'm definitely not saying plug into crypto, but the thinking behind what I did can apply in any market. Learning the market, learn how it moves, learn if it's in equities land, learn what the S&P 500 is, learn what the Russell is, learn what these indexes are, follow the index, then maybe start to find some players that are made up in that index, whether it's Apple or any of the tech stocks that are in the S&P or anything that's in the Russell, and then start to look at how they react in relation to how the index reacts. And just kind of, initially you're not looking to jump into a trade based on that. You're exploring, and in that exploring, you're learning the theory, you're learning the mechanics behind the market. And that's the real takeaway I wanted to project here is I find it interesting to dig into those mechanics behind the market. It just so happens I'm doing that in crypto land, and that comes from a personal interest in the non-financial side of it, the technology side of it. But on the market side of it, it certainly doesn't hurt that it's 24/7, 365. The price action is so clean. I'm actually a little bit worried about as I start to go back into equities. Man, those stock charts are rough because you got that big overnight gap and you got your weekend gaps and just it's candles blipping all over the place. And that's not an excuse, but it is, I've gotten a little bit used to how clean these charts are with all of these candles here. But that's my main takeaway. And I don't know if you remember, Rocket, when back, I don't know what you were doing when you were looking at channels like this, but I feel like it was a big moment for you as far as what you were exploring.
Yeah, no, it was oil. At least oil is one that I did a lot of them on. I also did the channels on the Russell index and kind of things like that. And for me, it really was just that overall, because I'm selling premium against it, right? And you don't really want to sell premium when it's going to move sharply against you. You probably work out fine because of the buffer that the premium selling gives you, but it's a lot more lucrative if you can sell premium when you're at the extremes. And so when I started kind of identifying the channel pieces here, like you called out, you get to the bottom of the channel, that was my go signal to sell puts, right? Because that gives me a little bit more buffer to the downside should you break through, but chances are you won't. And selling premium, time is on your side. So you make money as you kind of stall out and things like that. But as you start going up, right, you get a lot of that premium back a whole lot faster. Your volatility goes down. You're getting price movement in the right way. And then when you reach the top, you could sell calls against it and basically kind of do the flip side. I also would look at strangles when you're in the middle. So you're selling your put and your call. And one of the reasons I would do that is pretty much where you're at right now on the chart where you're calling out. That was one of the points where I've noticed that if there was going to be a reversal, and I went through lots of these, like in real time moving forward, as well as historically going back, is you typically start your change in direction in the midpoint. So if you're in a downtrend like you have in your chart here and you hit the midpoint and you start getting support off the midpoint and you start heading back to the top of the channel, you have a high probability of going through that channel. And then once you go through that channel, it almost always falls back to the top side of that channel for support before changing direction again. And now you start to form a new channel. So that was something I would look for. So in what you have laid out, if we were at the bottom, I'd be selling puts. If we were at the top, I'd consider selling calls, although I really don't like naked calls all by their lonesome. I like to pair them with something else to collect additional premium. So I almost would never touch at the top of the channel. But as you start coming down, I'd consider a strangle in the middle of the channel. And that worked out quite well for me in oil, CL futures and RTY futures as well.
Yeah. And the other nice thing that can potentially work in your favor is because the three zones of the channel, especially when it's a well-defined channel like we currently have here, the three zones, the top, the middle, the bottom, they're all major levels. They're important levels that that the price action is going to respect in the sense that it's going to react to those levels. And so like you were saying with the strangles in the middle of the channel, it's not a guaranteed probability, but there's a high probability that like this particular price action right here happens where it's a battleground between the buyers and the sellers. And so what ends up happening, especially beneficial to options trades, is you stall out as that battle rages on between the buyers and the sellers. And so on this chart, we're looking at the daily here, and there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days worth of largely sideways price action. It's somewhat slanted down, but on an actual price scale, if you don't tilt your head, it's not really that much of a price change from top to bottom. And so in those options plays, that's super helpful because then you're getting that theta burn, and you're kind of, if you're premium selling, you're getting all of those movements in your favor by just hanging out there. especially on those strangle.
Yep, and that's why I would put them on right there, because you can fight there, and you got top side, bottom side, and usually the distance you could get away would put you at the borders of the channel anyway. So even if you reached your strike, you're probably going to stall again. And again, time is on your side, and it was very profitable. You usually end up closing out as the theta burned away.
So that's it in a nutshell of what I've been exploring, what I've been doing, and the resolve to push through what has been a market that was not what early Viper wanted. Early Viper was dumb and just showed up and was like, I'm just going to buy this thing, and everybody's speculating on it. Everybody wants it, and I just go to the moon. Like, no, that's not reality. So I pushed through, and I wanted to learn, because these skills, especially price action, all that stuff, it's transferable between markets. It works on charts, any chart. It works on equities and all that. So I hope that comes through, that everything, all warnings and labels and hard hats and whatnot exist to you don't need to go into this level, into the crypto space. But explore and learn, I think, is the real summary of everything, as it tends to always be here.
Yep. And that brings us to the end of this week's episode. Kind of just a look into the background of Viper and how he's kind of explored different charts and price action and different mechanisms to figure out, hey, what type of trades does it make sense for him? Yep, he wasn't ready to board that spaceship to the moon. He was, but he realized that, it doesn't always go in a straight line to where it needs to get there, and you got to find something to do in the meantime. And so, he had a good call out there where the skills learned in crypto land basically transition just perfectly fine into equities world, at least when it comes to charts and the technical analysis and price action. It is extremely transferable. The only difference is, Viper points out, they get a whole lot more choppier on the charts because equities markets close. I'd say futures are a nice happy medium because they're open a little bit longer, and they typically have pretty good liquidity. They're not 24/7 yet, like the crypto space, but it definitely is something out there. I highly recommend doing it. It's something that I still augment a lot of my trades with, is just the general sentiment of the chart. What does it look like? Where are the levels? Where is the channel? And where am I in relation to that before I put on that equity trade of my premium selling? Is if the trend is, extremely downward facing, I might be a little bit cautious in selling a put if we are at the top side of a channel or something like that, because then breaching the strike becomes a higher probability. So anyway, good luck out there. Have fun exploring. Go back and just try to chart things and see how they line up, and then fast forward into the future. Leave your charts open. So I recommend Viper and I both use TradingView, and you can line up a bunch of charts, call out a bunch of levels, go about your business for a week, a month, something like that, and go back to these things that you have charted and see what has happened in the price action. Did it react on the levels that you had called out because it went up or down, or, where is it in relation to that? So you can mark those historical levels as you see fit, pay attention to it moving forward as time progresses, and just see where it falls and where it lands. Other than that, good luck out there. Have fun. And remember, think outside the block.